In May 2023, Nvidia briefly crossed a $1 trillion market capitalization, joining an elite club of American companies. By mid-2024, the chipmaker had surpassed $3 trillion, making it temporarily the world's most valuable company. This wasn't a gradual ascent. Nvidia's stock price increased more than tenfold between October 2022 and June 2024. The question isn't whether Nvidia grew. The public record makes that undeniable. The question is how a company founded to make graphics cards for video games became the infrastructure provider for the artificial intelligence era. Nvidia was founded in 1993 by Jensen Huang, Chris Malachowski, and Curtis Preem. According to company history, the name derives from the Latin Nvidia, meaning envy, though the founders have emphasized the NV prefix suggesting next version. The company's initial mission was straightforward: build specialized processors to render 3D graphics for personal computers. In 1999, Nvidia coined the term GPU, Graphics Processing Unit, with the launch of the GeForce 256. This wasn't merely branding. The GeForce 256 integrated transformation, lighting, and rendering into a single chip, offloading tasks previously handled by the CPU. GPUs differ fundamentally from CPUs in architecture. Where a CPU might have 8 to 16 powerful cores optimized for sequential tasks, a modern Nvidia GPU contains thousands of smaller cores designed for parallel operations. According to Nvidia's technical specifications, the H100 GPU, released in 2022, houses 16,896 CUDA cores. This architectural choice, originally made to render millions of pixels simultaneously for games, proved ideally suited for a different computational challenge: the matrix multiplications at the heart of neural network training. The parallel structure that could calculate lighting for every pixel in a game frame could also compute gradients for every weight in a neural network. In 2006, Nvidia introduced CUDA, Compute Unified Device Architecture, a software platform allowing developers to use Nvidia GPUs for general-purpose computing, not just graphics. This decision proved pivotal. CUDA gave researchers a C-like programming language to access GPU parallel processing power. According to Nvidia, more than 3 million developers now use CUDA. Importantly, CUDA is proprietary to Nvidia. Code written for CUDA doesn't easily port to competing hardware. This created what economists call switching costs. As AI researchers built models using CUDA over the subsequent 15 years, they were simultaneously building an ecosystem locked to Nvidia silicon. In 2012, a team from the University of Toronto led by Geoffrey Hinton entered the ImageNet competition, a computer vision challenge. Their system, AlexNet, used Nvidia GPUs to train a deep convolutional neural network. AlexNet won decisively, achieving a 15.3% error rate when the second-place entry recorded 26.2%. According to the paper published by Hinton's team, training AlexNet took 5 to 6 days on 2 Nvidia GTX 580 GPUs. The authors estimated a CPU-only approach would have taken months. The result wasn't just an academic milestone. It demonstrated that GPUs could make previously impractical AI techniques suddenly feasible, launching what's now called the deep learning revolution. Before AI became Nvidia's primary growth driver, the company's revenue came predominantly from gaming. In fiscal year 2016, Nvidia reported total revenue of approximately $5 billion, with gaming accounting for roughly 55% of that total. Data center revenue, the segment that includes AI computing, contributed less than 10% at that time. Professional visualization and automotive segments made up smaller shares. These figures establish a baseline. For context, in fiscal 2016, Nvidia's net income was $614 million. The company was profitable and growing, but it was fundamentally a gaming hardware business. Between 2016 and 2020, Nvidia's data center revenue grew from under $500 million to more than $6.7 billion annually, according to the company's financial reports. This represents more than 13-fold growth in 4 fiscal years. The driver was clear. Companies building AI systems needed GPU compute at scale. Cloud providers Amazon, Google, and Microsoft began filling data centers with Nvidia GPUs to offer machine learning infrastructure as a service. AI labs and researchers, unable to train large models on single workstations, rented access to these GPU clusters. Nvidia wasn't just selling chips. It was becoming the foundation of cloud-based AI. On November 30th, 2022, OpenAI released ChatGPT, a conversational AI model based on the GPT 3.5 architecture. According to OpenAI, ChatGPT reached 1 million users in 5 days. The model was trained on thousands of Nvidia GPUs. Media coverage of ChatGPT brought generative AI into mainstream consciousness. Suddenly, corporate boards wanted AI strategies. Investors asked companies about their AI roadmaps. The result was an unprecedented surge in demand for AI infrastructure. According to Nvidia's quarterly earnings, data center revenue in Q1 fiscal 2024, the quarter following ChatGPT's viral success, jumped to $4.28 billion, up 14% sequentially and 14% year-over-year. By Q2 fiscal 2024, it had more than doubled to $10.32 billion. The H100, announced in March 2022 and shipping at scale in 2023, became the GPU of choice for training large language models. According to multiple industry reports, demand far exceeded supply throughout 2023. News outlets documented waiting lists. Bloomberg reported in May 2023 that lead times for H100 systems stretched months. Analysts estimated that each H100 chip sold for between $25,000 and $40,000 depending on configuration and volume. Some reports suggested secondary market prices reached even higher. This wasn't artificial scarcity. Semiconductor manufacturing at cutting-edge nodes is capacity constrained. Taiwan Semiconductor Manufacturing Company, or TSMC, fabricates Nvidia's chips, and advanced node production can't scale overnight. By fiscal year 2024, Nvidia's financial profile had fundamentally transformed. The company reported total revenue of $60.9 billion for the fiscal year ending January 28, 2024. Data center revenue alone reached $47.5 billion, representing 78% of total revenue. Gaming, once the dominant segment, contributed $10.4 billion, or roughly 17%. Professional visualization and automotive segments remained smaller. Net income for fiscal 2024 was $29.8 billion, a near 50% profit margin. These numbers document a categorical shift. Nvidia had become, in economic terms, an AI infrastructure company. Nvidia's dominance hasn't gone unchallenged. AMD released its MI300 series accelerators in late 2023, targeting AI workloads. According to AMD, the MI300X offers competitive memory bandwidth for inference tasks. Google has used proprietary TPUs, tensor processing units, for internal AI since 2016, training models like Palm and Gemini without Nvidia silicon. Amazon developed Trainium for training and Inferentia for inference, offering them through AWS. Intel acquired Habana Labs and markets Gaudi accelerators. Yet according to market research firm TechInsights, Nvidia held approximately 80 to 90% market share in data center AI accelerators as of 2023. The CUDA software ecosystem and long-standing partnerships with AI researchers remain formidable barriers. In October 2022, the U.S. Commerce Department imposed export controls restricting sales of advanced AI chips to China and Russia. The regulations, updated in October 2023, specifically targeted chips exceeding certain performance thresholds in compute power and data transfer rates. Nvidia's A100 and H100 fell under these restrictions. According to Nvidia SEC filings, China represented a significant market. The company warned that export controls could cost billions in revenue. Nvidia responded by designing modified chips, the A800 and H800, that technically complied with restrictions while offering reduced performance. In October 2023, updated regulations closed that loophole. The situation illustrates how geopolitical factors now constrain even dominant tech companies. Training large AI models requires massive parallel compute, thousands of GPUs running for weeks. But once trained, running those models for end users, called inference, presents different technical requirements. Inference needs lower latency and can often use less powerful hardware. Some analysts argue this creates an opening for competitors. AMD, Intel, and custom chips optimized for inference tasks could capture market share in deployment even if Nvidia dominates training. According to comments from industry executives, Inference workloads are expected to grow faster than training as AI applications proliferate. Nvidia recognizes this. The company offers inference-optimized products and software frameworks. The question is whether inference remains a unified market or fragments across specialized hardware. Nvidia is expanding beyond chip sales into software and cloud services. Nvidia AI Enterprise is a software suite providing frameworks, pre-trained models, and management tools, sold via subscription. According to the company, thousands of organizations have adopted it. In March 2023, Nvidia announced DGX Cloud, offering GPU computing via major cloud providers. The company also promotes Omniverse, a platform for 3D simulation and digital twins, targeting industries like manufacturing and entertainment. CEO Jensen Huang has stated publicly that Nvidia aims to be a full-stack AI company. Financially, this makes sense. Software carries higher margins than hardware, and recurring revenue from subscriptions provides stability against the cyclical semiconductor market. Nvidia's valuation has prompted debate among investors and analysts. At its peak in mid-2024, the company traded at a price-to-earnings ratio above 70, significantly higher than the broader market average. Bulls argue this is justified by exceptional revenue growth and dominant market position in a transformative technology. Bears point to several risks: competition intensifying, potential AI investment slowdown if economic returns disappoint, and customer concentration. Major cloud providers account for much of Nvidia's revenue, and they're developing in-house alternatives. Some analysts note that previous technology manias, from dot-com to cryptocurrency, saw leading companies achieve unsustainable valuations before corrections. The question isn't whether Nvidia is important, it's whether current prices already reflect decades of future success. Nvidia's trajectory ultimately depends on a question larger than the company itself. Will AI deliver economic returns that justify the current infrastructure investment? Goldman Sachs estimated in mid-2023 that companies globally would spend over $1 trillion on AI infrastructure in the coming years. Microsoft, Google, Amazon, and Meta have all announced plans to spend tens of billions annually on data centers and AI compute. If AI generates proportional productivity gains, business transformation, and new revenue streams, that spending is rational, and Nvidia as the infrastructure provider captures enormous value. If, however, AI adoption proceeds more slowly, delivers less economic impact than forecast, or hits technical plateaus, infrastructure demand could cool substantially. The public record documents several facts. Nvidia made architectural and strategic decisions, parallel GPU design, the CUDA platform, partnerships with AI researchers, years before AI became commercially central. When deep learning breakthroughs arrived, Nvidia was positioned to capitalize. The company has executed consistently, shipping competitive products, maintaining technological leadership, and building an ecosystem that reinforces its market position. Financially, Nvidia transformed from a $5 billion gaming company to a $60 billion AI infrastructure giant in under a decade. Whether that trajectory continues depends on factors both within and beyond the company's control: competitive response, technological evolution, economic conditions, and ultimately whether artificial intelligence reshapes industries as dramatically as current investments assume. The transformation, however, is already documented. Nvidia's journey from graphics cards to trillion-dollar valuation isn't speculation. It's a matter of record.